Question number 5. A, B and C are partners in a firm sharing profit and losses in the ratio of 3:3:2. Their balance sheet as on 31st/12/2020 was as follows. Sundry creditors 95,000. Partners capital. A's capital is 1,50,000. B's capital is 1,50,000. C's capital is 2 lakhs. Total capital is 5 lakh rupees. Partners current account. In this problem, current account balance is also available. A 30,000 rupees, B 15,000 rupees, C 25,000 rupees. The total of the current account is 1,05,000. Bank total is 1,10,000. Stock is 1,38,000. Investment is 12,000. Debtors is 1,40,000. Land and building is 2,50,000. Goodwill 50,000. The total of the balance sheet is 7 lakh rupees. They means the partners decided to dissolve the firm on 1/1/2021. Realization expenses amounted to rupees 4,000. A reports the result of realization as follows. Land and building 1,80,000. Debtors 1,20,000. Investment 11,000. Stock 1,51,000. Goodwill nil. Close the accounts of the firm. That is in the dissolution only, usually the firm closes all the accounts of the firm. Okay, they are closing the business. Permanently they are closing the business, and so they close all the accounts of the firm. Assets they closed, liabilities they closed, and then outside liabilities, partners loan, and then unrecorded assets value, if any, that should be transferred, and then unrecorded liabilities, if any, assets and liabilities that has to be considered while preparing the realization account, then partners loan account, then partners current account, finally they settle the partners capital account. Okay, so this is the procedure to prepare the accounts in the case of dissolution. So close the accounts. See, we have to close all the accounts in the firm. Okay, assets, liabilities, capital, all should be closed. The first step, we have to prepare a realization account. In that realization account, we have to transfer all the assets of the firm. Okay, book value of the firm should be transferred to realization account. Okay, so first realization account debtor to stock, then realization account debtor to investment, then to debtors 1 lakh, all should come under the debit side. Land and building, goodwill, they transferred all the assets of the firm to the realization account. And then like assets, liabilities also should be transferred to realization account. Okay, so for transferring the liability, the entry would be sundry creditors liabilities account debtor to realization. So sundry creditors account debtor to realization. So by sundry creditor is 95,000. So all the assets and the liabilities are transferred. Okay, then the remaining may be the partner's loan account or partner's wife loan account, and then capital account. For capital account, and then accumulated profit or accumulated loss. Okay, accumulated profit or accumulated loss should be transferred to partner's capital account in the profit sharing ratio. Then the first step, we have to transfer the assets, all the assets except cash, and then second, they have to transfer the liabilities except the partner's liability, partner's loan and all. Then the third one, external liability only to be transferred here. Then the third step, we have to realize the assets. After transferring the assets, they have to realize, sell the assets. The details are given. Land and building is sold for 1,80,000. So the book value is 2,50,000, but it is sold in the market at rupees 1,80,000. Okay, it is lesser than the book value. Sometimes it is lesser than the book value. Sometimes it is sold in the market more than that of the book value. Then debtors, the money collected from debtors is 1,20,000. Here the debtors total is 1,40,000. Investment, they sold at 11,000. Here the investment is 12,000. Stock, the value of stock in the book is 1,38,000. Here they sold it for 1,51,000, more than that of the book value. Goodwill, goodwill amount is 50,000 in the book, but no amount in the it is not realized. Okay, there is no goodwill. They cannot sell the goodwill. Okay, so these are all the assets, amount of assets realized. The total amount of realized is, or assets realized is 4,62,000. Then with the help of this 4,62,000, they have to settle the creditors. 95,000 rupees. Sundry creditors is 95,000. If the problem is silent, we have to settle the creditors at the book value. Okay, 95,000 rupees, they have to be settled. The same 95,000 is given to the creditors. Okay, then bank realization expenses, that is 4,000. So then we have to total both the credit side as well as the debit side. The debit side total is 6,89,000. The credit side total is, that is the 95,000 plus 4,62,000. If we add, we will get 5,57,000. Okay. The debit side total is more than that of the credit side total. Debit side total is 6,89,000. If we deduct 5,57,000 from 6,89,000, the loss, the firm faces loss in this case, loss to the extent of 1,32,000. This 1,32,000 should be transferred to partners capital account in the ratio of 3:2. So 1,32,000 into 3/8 is 49,500. A's loss share is, share of losses, he has to bear the loss of 49,500. B has to bear the loss of 49,000, same 49,500, because the ratio is one and the same, 3:3. C has to accept his share of loss to the extent of 33,300. Okay, so in this problem, realization account produces the loss. Whatever is the case, sometimes the realization produces a profit. The net result of realization is profit. Sometimes the net result of the realization account is a loss. Whether the company earns profit or loss, both should be transferred to partners capital account in their profit sharing ratio. But in this problem, it has to be transferred to, in this problem, we have to debit or credit the realization profit or loss to the partner's current account. Here we have the realization loss, and so that should be transferred to partner's current account, because current account is given. Okay, if the current account is given, all the profit or losses should be transferred to the current account of the partners instead of the capital account. Okay, so because they are following the fixed capital method, we transferred the realization loss to the current account of A, B and C. The loss is 1,32,000, that is transferred to all the partners in their profit sharing ratio. This is the current account of partners. Okay, this has to be closed, and this the balance should be transferred to capital account of the partners. Okay. Then we have to close the capital account of the partners. So the balance is A's current account is 30,000, B's current account is 50,000, C's current account is 25,000. Already we have transferred the realization loss, that is 49,500, 49,500 and 33,000. So now we first close the partner A's current account. Here the balance is 49,500. The opening balance of current account is 30,000. Difference is 19,500. The entry would be A's capital account debtor to A's current account. Then go to the second case, B's current account. Here the balance is, credit side the balance is 50,000. Debit side the balance is 49,500. So 500 rupees is the difference. The entry is B's current account debtor to B's capital account. Then let's go to the third case, C, partner C. Partner C, realization loss is 33,000 rupees, a balance of debit side. The balance of credit side is 25,000. Difference is 8,000. For C also the entry is C's capital account debtor to C's current account. In this way, they have to close the current account of all the partners and the balance amount should be transferred to partner's capital account. This is the capital account of all the partners. Balance 1,50,000, 1,50,000, 2 lakhs. Then we transferred amount from current account. A's capital account debtor to A's current account 19,500. C's capital account debtor to C's current account is 8,000. Here B's B's current account debtor to capital account is 500. Then we have to balance. The balance amount should be settled. So A's capital account amount is 1,50,000 total amount. B's capital amount is 1,50,500. C's capital amount is 2 lakh rupees. Then here we have to see the balance is total of A's capital account is 1,50,000. Current account is debited 19,500. So the firm has to settle A to the extent of 1,30,500 rupees. Then here the total of B's capital account is 1,50,500. B has to be settled 1,50,500 by the firm. Then C 2 lakh rupees. Here we have current account balance is 8,000. So C has to be settled 1,92,000. In this way we have to close the capital account. The final step in the dissolution is preparation of bank account. Okay, balance 1,10,000. Realization assets realized is 4,62,000. Then sundry creditors settled is 95,000 rupees. Expenses of realization is 4,000. A is settled 1,30,500. B is settled 1,50,500. C is settled 1,92,000 rupees. The total of the bank account is 5,72,000. In this way, we have to prepare the dissolution account. First, we have to prepare realization account. Second, in this problem, we prepare current account of the partners. Then current account of the partners is transferred to capital account. And we are finding out the amount which has to be settled and we settled. And then we have to prepare the bank account. That bank account should be tallied. Okay. In this way, we have to prepare the dissolution account. Hope you understand.